Hey, this is Bitcoin Asset Research with Allard. Today I'm going to answer the question, is MSTR a pyramid scheme? This question comes from Rex Finance, who has published a very comprehensive post as well as a video on his YouTube channel about why he believes that MSTR is a pyramid scheme. So we can just look through this real quick. He basically goes through a history of some of the Bitcoin buys that have been happening, as well as the corresponding BTC per share, which translates over to an increase in BTC per share. So this is all looking pretty good right now. The facts are that he has looked into the whole idea of increasing BTC per share, and that this is somewhat of a justification for the stock trading at a premium to the net asset value of Bitcoin. And then he says here, for exposure to MicroStrategy's Bitcoin to be worth it, you need Bitcoin per share to rise by 427% or higher. Otherwise, you'd be better off buying your own Bitcoin because you own more of it in your pocket than you would in MSTR's balance sheet. So this is a pretty common argument against MSTR. And we see this all the time from people that haven't really dug into what exactly is going on. So let's just go into the video and jump right in.
Without further ado, let's get into this. The most common argument out there as to why people believe MicroStrategy should outperform Bitcoin and trade at a multiple to their net asset value is because of something called intelligent leverage. In fact, MicroStrategy themselves use intelligent leverage to sell their stock to investors. Let me explain.
So this isn't completely true, but it's somewhat accurate. Intelligent leverage is meant to describe the mechanism of getting zero interest rate debt that is not callable and is extremely long duration. And this is what allows them to buy Bitcoin, hold it on the balance sheet, and eventually get it to a point where the debt converts and falls off of the balance sheet, or at the very least they are able to refinance that debt. So that's really what intelligent leverage is about, and it's not really about this is the reason why you should buy the stock. The reason why the stock makes sense is because BTC per share goes up over time, and that is a function of intelligent leverage. But again, intelligent leverage isn't the thing being used to sell the stock. But we could misconstrue the two over here, so let's just see what he has to say.
Explain to you what intelligent leverage is. To do so, I'm going to create my own corporation called Rex Finance Corporation. As of today, let's say Rex Finance Corporation has 10 coins and we have 1,000 shares outstanding. Every coin is selling for $2.
I see this example a lot on Seeking Alpha. So when I write MicroStrategy articles, you have a lot of bears in the comments and oftentimes these bears don't actually have positions. So this is a very common example where they would say, hey, look, if I had 10 coins and I had so-and-so shares outstanding, and they'll eventually take this through and be like, okay, well, with every new issuance, it's really the newest buyers that are paying the people who have previously invested.
And every share of stock is selling for $1. That means that each share has a 1% ownership of one coin on the balance sheet. There are 10 coins on the balance sheet for 1,000 shares outstanding. Rex Finance Corporation, let's say, doesn't have a profitable business. We don't have any cash flows, but we want to add 10 more coins to our balance sheet. So we hit up the debt markets. To add these 10 additional coins to the balance sheet, Rex Finance Corporation raises $20 via convertible debt that will convert into 20 shares outstanding over time. This means that if I lend Rex Finance Corporation $20 via that convertible debt, I have a 50% interest in the assets that were purchased with my money. I gave them $20 and they purchased 10 coins. 10 coins per $20 is a 50% interest in the assets that were purchased with my money. So what does the new Rex Finance Corporation balance sheet look like now? Well, they now have 20 coins on the balance sheet and 1,020 shares outstanding. If we have 20 coins and 1,020 shares outstanding, each share now represents 1.9% ownership of a coin. So the original holders of Rex Finance Corporation increased their coins per share by 90%. They went from 1% ownership of a coin to 1.9% ownership of a coin, which is a 90% increase in coins per share. That sounds like a pretty good deal, but who was punished?
Now let's just skip ahead a little bit.
And we raised $20 via convertible debt, and it resulted in a 90%.
You can see that he does this example a few more times in order to drive home the point that it is consistently newer entrants that pay the returns to the previous entrants. So fundamentally, the claim boils down to MSTR relies on bigger and bigger financing rounds to increase Bitcoin per share. Hence, it is a pyramid scheme. Okay, so let's break down how much of this is true and how much of it is false. So this part is true. It does depend on bigger and bigger financing rounds in order to increase Bitcoin per share. This must be the case because the Bitcoin as a pile is growing over time. So if you want to grow that Bitcoin by a fixed percentage, then you're going to need more money, assuming that Bitcoin's price stays flat or increases. So this part is definitely true. Does that mean that it is a pyramid scheme? No, it does not. It does not mean it is a pyramid scheme. And let's get into why. The point is to understand why people participate in these bigger and bigger financing rounds. Right? So what many of the bears are assuming is that everyone wants to get into these bigger and bigger financing rounds because they all want exposure to more Bitcoin per share. And this is categorically not true, and we can easily see that. In the case of convertible bond investors, they are not actually getting it for the exposure to more Bitcoin per share. They're giving up their money because they want that convertible bond. Now, why do they want that convertible bond? Inside the bond is a long-dated call option on MicroStrategy. Now, if you're long a long-dated call option on a stock, you can do something called volatility arbitrage to extract a profit from the volatility of the stock. Okay, so all you would need is the call option. You would need some kind of pricing formula to figure out the delta of the call option, and then you would go long or short the underlying stock in order to generate the profits. I actually did a video covering exactly how that volatility arbitrage works. You can see it actually right here. If you come to the channel, this is how MSTR convertible bonds make money. And when you go through this video, I believe it starts around the 8-minute mark is when I talk about volatility arbitrage. Because honestly, it's just completely asinine to think that the bondholders are buying the bonds for the Bitcoin exposure. They're buying it for the volatility exposure. Now, will this dynamic change over time as more pools of capital start entering the convertible bonds market? Yes, it probably will, because we've seen Strive Asset Management file for Bitcoin bonds ETF, where they specifically mentioned that they would be holding MSTR bonds within that ETF structure. So there is going to be more people that are buying the bonds for the Bitcoin exposure, but for now it has mostly been for volatility exposure. Now, MicroStrategy is the most volatile stock out there, and its options market is the most lively out there, so it stands to reason that there is significant demand for these kinds of option products that are embedded within the bonds. And it just so happens that when people want to buy these bonds, they are participating in these bigger and bigger financing rounds. Now, if an ever-increasing group of people purchased chairs or bread or pencils, you would not say that they are participating in a pyramid scheme. In fact, you would probably call this an economy. Kudos to you if you understand this reference, by the way. This is because people find utility in chairs and bread and pencils. Okay, so that's why they're buying it, because they can use the chair or the bread or the pencil. So chair, bread, or pencil buyers, they don't care about the companies selling chairs or bread or pencils. They just care about the product. They care that the chair works, that the bread is tasty or it can fill you up, and the pencil can actually write on a piece of paper. They care about the product. They don't care about the company and whether the company is able to increase their profit margins or increase their revenues or anything like that. This is not a consideration for the people who are buying products. And the same exact thing is true with MicroStrategy securities. The securities are the products. People find utility in the convertible bonds and in the preferred stocks. So MicroStrategy is about to release preferred shares, and this is Strike, STRK. I did a video on that yesterday. But basically, the reason why people are going for these is because they find utility in them. This is not an investment to gain access to MSTR Common. Them buying this has nothing to do with whether MicroStrategy gets more BTC. And that's really the false equivalency that a lot of the bears are making. They think that, oh, the incoming pools of capital, the new entrants, the only reason why they're going in is because they're identical to each other and they all want access to more Bitcoin per share. That's not true. That's just completely false. The convertible bond investors, they want to do volatility arbitrage. The preferred stock investors, they want their dividends. They want some kind of exposure to another form of long-dated volatility. It doesn't really matter. The point is that they're not trying to get into this operation that allows them to get more Bitcoin. So it really highlights how complex the financial markets are, how many different people have many different goals. So these securities, they're actually products. They're not necessarily investments in the actual business. And that can be a little counterintuitive, but it's important to realize what's going on. So if you want a clear, robust bear argument against MSTR Common, well, this is what you're going to have to do. It's going to be the same as a bear argument against a chair or a bread or a pencil business. And what do you think that's going to be? You're going to have to explain why the product will be less desirable going forward. And so here would be a quick example, right? If I wanted to create a bear case on a pencil business, I could say something like this. Well, look, I haven't been writing anything for at least a year now, and every time I write something, I use a pen, so I don't see why pencils would be a product with a good amount of demand going forward. Therefore, I'm bearish on the pencil business. That would be a more rational bear argument against the pencil business than the current bear arguments against MSTR, right? Because right now the situation is that the MSTR bears, they didn't even get to this step yet. They didn't even get to the step of identifying why the product will be less desirable going forward, because they don't even understand what the product is. They think that the product is a software business. That's not true. The software business is one thing that MicroStrategy does, but the actual product that's giving them a ton of revenue is the securities selling business. They're packaging these securities together that give investors some kind of exposure to Bitcoin's volatility and MicroStrategy's volatility. And then the buyers of that security, they take those securities and they do something with it. The same way the buyers of a chair are going to take that chair and sit on it. The buyers of bread are going to take that bread and eat it. And the buyers of pencils are going to use that to do their Scantron test or something. So I kind of want to close off with this one thing that I've said before in prior videos. You can find this video right here, MicroStrategy, This View Changes Everything, where I argue that MicroStrategy is Bitcoin's only investment bank with a very formidable moat. So this is what I said. MicroStrategy is therefore the first company in history to be misunderstood because it is straddling two different monetary standards. Fiat accounting forces the treatment of Bitcoin as a balance sheet item. The economic reality is that the Bitcoin purchased is actually a revenue to MSTR. And seriously, it takes a lot to actually get to this point of understanding, because you have to understand that the securities being issued are actually products. It's the same as if a chair company was selling chairs. Well, MicroStrategy is a security selling company and it's selling securities. So until you realize that, you're not at the point of being able to create a formidable bear thesis. And the logical extension of this is that the absolute dollar value of BTC yield is actually earnings to the company. So what do I mean by absolute dollar value? So let's say BTC yield right now is 2% year to date, so something like that. Well, 2% year to date is equivalent to some amount of Bitcoin that now entered the company's total capital structure. So take that amount of Bitcoin, multiply by the dollars per Bitcoin, and that's your dollar value. Those are the actual earnings of the company. Okay, it's not the earnings of the software business. It's not the earnings of anything else that's going on. They are selling securities. That's the product. And the revenue for this is clearly the money that they got for selling securities. Now, when we think about the Bitcoin treasury in a very naive but acceptable understanding, is that these are assets which are simply added on top of the equity value for this securities selling business operation. So all of the securities being issued, that's revenue. And then all of the dilution that happens, that's cost of revenue. So the BTC yield is actually the earnings. So you have an operation that has earnings and future earnings. And anytime you have future earnings, you have a net present value of the equity value of this operation. Okay, so that's your equity value. Then what's the Bitcoin treasury? The Bitcoin treasury is assets in excess of that equity value. So the way you price a business is obviously its assets net of any debts and liabilities, plus the potential for that equity to generate future cash flows. In MicroStrategy's case, you have to correctly identify what those future cash flows are. Those future cash flows come from the ability to issue future rounds of securities. It comes from the ability for the securities to be more and more attractive to a growing pile of people. That's what BTC yield ultimately is talking about. So again, it goes back to this earlier point. The fiat accounting forces the treatment of Bitcoin as a balance sheet item. But the economic reality is that the Bitcoin coming in, all the Bitcoin that's being purchased, that's actually the revenue to the company, because the company just takes whatever proceeds it gets from securities sales and it just goes into buying Bitcoin. Anyway, that's just a short video explaining why it is not a pyramid scheme. I think this company is very easy to misunderstand because of that exact dynamic that I laid out in the previous slide. This is really a company that is being misunderstood because it is straddling two different monetary standards. The sooner we're able to reconcile these two, the sooner we're going to get somewhere with MicroStrategy's valuation. MNAV, I think, is extremely irrelevant to the valuation of the company. If you look at any company out there, none of them trades at 1x book value. Many of them trade at far more than 1x book value. Anyway, that's the video. Thank you so much for watching. Leave a like, subscribe to the channel. Feel free to check out some of the other videos. I'll see you next time. Bye.